I want to invest in shares or PMS, portfolio management services in India. So in this case, monies can flow from the NRE or NRO account into the NRE PIS account, where the investments would be on a repatriable basis, because that portfolio investment scheme account, PIS account, is a repatriable account and which is mapped up with the NRE account. One can make investments on a non-repatriable basis by opening a Demat account and mapping up with the NRO account. The sale proceeds are taxable in the manner that if those investments of shares held directly by the NRI or through the PMS route are held for a period of more than 1 year's time, then they are taxed at a rate of 10%. And if they are held for a period which is shorter than 1 year, then they are taxed as short-term capital gain at the rate of 15%. The gains, long-term gains to the extent of 1 lakh are exempt in the hands of non-NRIs. The dividends would be taxable at 20%, and one of the concessions which normally very few NRI avail of is that if a non-resident has invested in shares of Indian companies, and if there is a long-term capital gain and the original investment of those shares is made out of NRE account or remittances from outside of India, they qualify for exemption under section 115 capital F, where the amount which is the sale proceed of those shares, if they are reinvested for a period of 3 years in specified assets include shares of other companies and also bank deposits, then the entire capital gain in that transaction would be completely tax-free. Now, when it comes to repatriation of funds, the repatriation of funds would depend upon whether the funds originally at the time of investment have originated from the NRE account, which is a repatriable account, or an NRO account, which is a non-repatriable